So as we listen to these soft numbers for this one given month in retail sales, how much of Indochino's success is tied to the overall marketplace growing, overall retail sales growing, as opposed to taking market share from existing retailers?
Yeah, I think the numbers, speak to a lot of change in retail at large, and for us, we're really recreating how a generation, shops for apparel. And the last 4 years, we transitioned from an online-only brand to an omni-channel brand, and have opened 45 showrooms across North America, because we really wanted to focus on an experience-based model versus just transaction, and that's worked really well.
But it's interesting you said showrooms. You didn't say stores, and as I understand, there is an important distinction there.
There is. I mean, for us, we wanted to really recreate the sort of traditional store. So things like we're appointment-based. We'll have over 400,000 pre-booked appointments before we open the door this year. We're virtual inventory, so every garment we make is made after the order, and so we don't have inventory in the store. And then, it's very, very focused on experience. Each customer spends an hour with what we call a style guide.
You have an arrangement with a major manufacturer in China.
We do.
Who is also an investor now, as I understand.
That's right.
As part of your company.
That's right.
How vulnerable could you be to what's going on with U.S.-China trade disputes right now?
Yeah, I mean, we're a little bit different than, again, a traditional retailer in terms of how they manage inventory. Of course, we don't know how everything is going to settle between the two countries. But for us, we deliver direct to consumer. We actually just moved to 2-week delivery for all of our.
Oh, is that right? 2 weeks?
Yeah, which is a big part of that partnership was enhancing the consumer experience from a product side. We'll sell, produce, and ship over 500,000 one-of-a-kind garments, and that's all done in China and then shipped direct to the consumer.
So the two biggest inputs for a company like yours, my guess, would be labor and then input costs, like material and all that kind of stuff. If the trade war between the U.S. and China gets worse, doesn't that materially affect your business?
Not all of our fabric comes from China, so we feel like we have a good sort of diversified portfolio from a fabrics perspective, and that actually is the #1 cost in our business. We buy tens and tens of millions of dollars worth of fabric every year, and so we feel like we're in good position there. From a labor perspective, we have quite a unique partnership with our shareholder, as you said, in China, where our costs, or our COGS on producing the product, are very, very stable, and will be stable for the next 5 years.
So I assume one of the advantages of your model is reduced capital costs. You don't have a lot of money tied up in inventory all the time. You make it one at a time.
That's right.
In-time delivery, essentially. What you have. How do you win over customers, though? Because for most of us, we're used to going into a men's store and buying a suit. And by the way, if something's wrong with it, we can take it back and have it altered and things. How much of your business is repeat business? People saying, I bought one, I really like that, I'm going to buy another one.
Yeah, it's actually pretty incredible. I mean, we feel like we're one of the fastest growing apparel brands in the world. Our 4-year CAGR is close to 50% year over year the last 4 years. But what's really interesting when you look at our numbers is the amount of repeat purchase. So last year, in a year where we grew again, just around 50%, over half of our purchases were repeat customers coming back and buying again. So the business is growing rapidly, but we feel we're doing it in a very, very sustainable way, and not just about new customer acquisition, which to us is important.